Who would have said that we are having a reddish day, a very red day? Huh? Who would have said it? If you are looking at the green fields, if you are looking at Ethereum gains of 74%, XRP 50%, and so on, just this little box, link 117%. Of course, those are the gains in the last whole month. I'm always showing you this picture just to put you into some perspective when you feel the fear, when you feel the FUD on these red days. Welcome back to the Crypto Source channel. Today we are looking at top coins, and after that we are doing a technical analysis on the altcoins and where we stand on the big picture on the weekly chart. Last time we did a daily analysis of the altcoins. Today we are taking a wider picture, the picture that will give us more clearer answers where we stand and why the red is happening today. If that interests you, stick around. Just a quick glance in our top coins, and as I stated, we are in the red. Today we are having a pullback, and this is even smaller pullback that we had yesterday. Yesterday there was a two-digit numbers in the red. For now, as we stated in our green fields of the monthly price changes, nothing to fear about. What's moving and what's shaking, you can see that we are having a much bigger moves to the downside than to the upside. The coin I'm watching, 0x, is having a pullback of 12%. No fears. And now let's head to the technical analysis part of our videos and answer some questions on the weekly chart of altcoins. On the daily, yesterday we talked about how we are expecting a pullback in the upward trajectory of all the coins besides Bitcoin, the altcoins. We drew a parallel channel in the latest developments of this year, a channel that is ascending from the March, from the biggest crash in the latest crypto history. And now I will show you the bigger channel that is dwarfing this channel that we talked about yesterday. It's always better to look in the bigger picture, right? Very impressive. The chart that is tracking altcoins all the way from the 2017. We entered it beginning of the 2017. Make a support on the lower band, then make a resistance and broke out of it in the late 2017. Then we had our bubble. This was price trying to run out of the channel, but nonetheless in the 2018, in the month of August, that's exactly 2 years ago, we entered back in this channel, and since then, no matter our latest developments, the price changes and the boom that we are experiencing, we are not being able to get out of it. As you can see, we crashed, making us bottom in the end of 2018, touching again the lower band of that parallel channel. Another time we touched it was in the big crash that we mentioned earlier this year. In 2019, we again tried to break out of this channel, but was rejected with fears. This is huge resistance at the time, and one more proof of the validity of this channel. As always, the middle line is playing a huge role, like support, like resistance, and so on. But let's talk about the current developments. Let's talk about what is happening right now in this channel. You can see it, right? What is happening? We are touching once again the upper band of this channel, the resistance that is holding us back for many years now. Isn't it logical to expect that this upper band of the parallel channel will reject us down? Absolutely it is. So by the probability, we are most definitely going down. How low will we go? That's a topic to discuss in more details. But for now, I'll just present you one support that we could be facing and the trend line that we could be hitting. Of course, it's always possible that we bounce all the way to the middle line of this channel, and in extreme bearish scenario, which I don't expect, I really do not expect this super bearish scenario to play out, because in my opinion, in my analysis, we are done with the lower band of this channel. But you never know, because continuation is always the king. Now let me draw you that channel that I was talking about. Not a channel, just one line, one trend line of a horizontal support and resistance that we could be going down, and that is the more probable in my opinion. This is the trend line that separate mans from boys. Just kidding, this is a trend line that is the most important. Nonetheless, that in some way make a boundary between this bear market and between the future bull market that we just stepped in. There you go, boys. We just peeked around. Of course, you can see how important this trend line is and how fiercely price bounced after touching it. And after it was broken to the downside, it made a 2-year bear market for altcoins, and never, not even in 2019 or this time in February of this year, it didn't even come close to this trend line, because the bear market was too strong still for the altcoins. But now we rose like a dead phoenix in the ashes. Okay, enough of chit-chattering and bullshit. So where we stand and what's the target? Currently, we are hovering around $150 billion. And our support at this magical trend line is at 135 billions. This is our most probable support, and if you take a bigger picture, it's not a big pullback, just a healthy retracement in the uptrend. If you're wondering why retracement will probably come, I'll call Mr. Fibonacci one more time, like a guest to our show. There you go, Fibonacci retracement at its finest. We took the peak and we took the bottom of this move, and as you can see, where are we now? We are touching, or let's say we touched 23.6% retracement. This is big resistance according to Fibonacci numbers, and it was somewhere about $160 billion, 165 to be exact. So when we break this resistance, oh boy, firecrackers and fireworks. That's all from me today. The resistance is clearly shown. Now, I'm wondering, what do you think about this idea? Does this resistance have that significant level, or you think otherwise? Let me know in the comments. If you like the video, smash the like, and if you want to know about my future videos, subscribe to the channel. And until the next time, the Cryptosaurus is roaring with you.